a view on what index funds you should be investing in for the long term. It's important to understand why I have chosen these. These particular funds have been chosen based on my investment goals. It's based on the markets that I want exposure to. But alongside that, I also want to protect my downside. I know markets go up and down all the time. And of course, like you probably, at a basic level, I want everything. I want all the upside, but none of the downside. If you're making money, I'm in. But if you're losing money, no, you know what, keep me out of that. I want my money to grow with the market. I want it to keep pace with the market. My ideal, of course, is to beat the market. But my reasonable expectation is to match the market's returns. And the thing I really want to avoid, really want to avoid, is to return less than the market. And other questions I think about are, what markets do I want exposure to? So my index fund strategy is made up of 4 parts. Vanguard's US Equity Index Fund, or VUSEDA, which gives exposure to 3,500 companies. And then there's also this S&P 500 ETF, or VUAG, which currently holds 506 companies. Now recently, I've seen various projections that show most of the growth in the global economy won't be in the US like it has been over recent decades. And so naturally, I want exposure to those markets because I want to take advantage of that upcoming growth. There are 2 I've got my money in at the moment. The Vanguard Emerging Market Stock Index Fund, or VANEMPA, and Vanguard's FTSE Emerging Markets ETF, or VFEDG. I'd pick 2 particular fixed income index funds. The UK Inflation-Linked Gilt Index Fund, or VUKIFLA. Then there's the US Government Bond Index Fund, or, and you're gonna like this one, VAGUGA.